Good morning. It is Friday, December 5th, 2025. It was a tough week for borrowers. Here is the data you need to know right now. The 10-year Treasury yield is at 4.05%, which is up sharply from last week. The average 30-year fixed conventional rate is 6.625%. Government FHA and VA loans are averaging 6.125%. Home equity lines of credit are at 8.50%, and adjustable rate reverse mortgages are hovering around 6.875%. As always, these are indicative averages based on high credit scenarios. So what happened this week? The market got a nasty surprise on Wednesday. The latest inflation report came in hotter than expected, showing prices aren't cooling down as fast as the Federal Reserve wants. The bond market reacted violently to this news. Investors sold off bonds, which drove yields and mortgage rates straight up. We essentially gave back about 3 weeks of rate improvements in just 3 days. Looking ahead to next week, it is all about the Federal Reserve meeting on Wednesday. Given this week's inflation data, we do not expect a rate cut. Instead, we expect tough talk from the Fed about keeping rates higher for longer. We anticipate rates will remain volatile and elevated until that meeting concludes. Now for this week's deep dive. If you look at our rate breakdown, you see the 10-year Treasury yield right at the top. Why? You aren't buying Treasury bonds, you're buying a house. The simple answer is that mortgage rates and the 10-year Treasury yield act like identical twins. They almost always move in the same direction. Here is the explanation. Investors view U.S. Treasury bonds as a risk-free investment. A 30-year mortgage, however, has risk because you might default, or you might refinance early. To convince an investor to buy mortgage debt instead of a risk-free Treasury bond, you have to pay them a premium to take on that risk. That premium is usually about 2.5% to 3% above the current 10-year Treasury yield. So, when inflation news pushes the 10-year yield up, mortgage rates automatically have to jump up too, just to maintain that required spread. Watch the 10-year and you know where mortgage rates are headed. To close out the week, here is a final thought. This week was a reminder that the path to lower rates is never a straight line. It is jagged. If you were quoted a rate on Monday, it is likely gone today. In this environment, speed matters. If the numbers work for your budget today, lock them. Gambling on next week's inflation data is a dangerous game. If you found this update helpful, please like this video and subscribe to the channel. I will see you on the next update. Have a great weekend.